Happy Friday, everyone. It's 9:02 a.m. Eastern U.S. time on the 15th of September, 2017. Thanks for joining me. I'm getting alerts that there are frames being dropped, so the um, display in front of you may go into buffering. If it does that, just hit refresh and it should come back. It should catch up. Um, it is like Friday. Please hit the like button as you go out, or right now if you're in the YouTube page. I'd appreciate that. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. I'm changing up the format a little bit, making it trying to shorten this to about 10 minutes, unless there's something significant. The overall market stance this morning is to safety. It is a mixed bag. There's not much there to that's dropped quite a bit. Euro stocks have dropped mainly on the London explosion, and of course yesterday we had a reaction to the North Korean missile test that was done at right after the close. That has put Japan into a tizzy again, and so those are the key things that are playing. Again, the markets are slightly off. Most indices are off of their close yesterday. They're trading lower, and so this morning we have the same situation basically coming in, but based on news, we have the same situation as we did yesterday. Yesterday, I was looking for the market to test up and then rotate down as a primary idea. I was looking for failure downwards, and that did not happen at all. And so we'll see how today plays out. It is expiration Friday. It's quad witching Friday, so early on, we're likely to see size popping in and out of various products um, as folks look to hedge positions that are have gotten into the money or that are expiring. Um, that's it. As far as what we're looking for today, what's remaining, we're looking for business inventories at 10 Eastern U.S. time for July, 0.2% expected. The key number today is the 10 o'clock University of Michigan confidence. The prelim number for September, looking for 95.0, 95.0. All speakers have already spoken. We've had two ECB speakers and one BOE speaker. Let's quickly get into yesterday's hypotheses. So, based on the stance that we had yesterday, the market was expected to push up into the 92.75, 93 quarter area, find resistance, and then roll over. The expectation was for the market to seek out that gap zone again. It looked to me, based on the overnight action and based on how we stood the last couple of days, it looked to me like the market has moved below its point of control in the region and is falling below, starting to fall below the balance of the prior day. So I perceived weakness there. It's hard to ignore that. That did not happen. The secondary hypothesis was an immediate drop, continuation of the overnight trade, which was weak, to find a base around 83 to 85 and then a bounce up into the close. That did not happen either. What played out yesterday was Hypo 4, which was to push up. I didn't cover that, but it's to push up into the point of control, sit sideways for a while, and then continue higher into and towards 2,500. So that's what we got. Here's what happened yesterday. We had a clean open swing. Here's the opening swing right there. Opening swing high, low, and then we took out the high, and then we started to march forward. So with the opening swing high being taken, it takes out hypo 1. So hypo 1 gets taken out. Hypo 2 gets taken out. The only time Hypo 1 or Hypo 2 come back is if we extend the 2489. But what we did here yesterday was a classic auction, a failed auction, one tick failed auction. So what we did is we pushed lower. So the participants made all of this effort to bring the market down. Let me expand the scale here a little bit. The markets made an effort to push all the way down, and all they could achieve once they pushed all the way down in testing yesterday's low, the best they can do is one tick. One tick. And so this is what's called a one tick failed auction. It wasn't very aggressive because I didn't see a drive from there. It bounced around a little bit, but once we took out the opening swing high, now there's a strong indication that the low is in, at least for the first couple of hours. The low is in. We test by one tick. This is a classic thing. We go down. We expect more participation as we push through the low. We expect to run some stops. There's no participation, so now the buyers are free and clear to go ahead and rotate this up and take it to the point of control, which is right here. So that was the first test. So you see here the one tick failed auction, push up, point of control on the dot, rotate down 2.75 points, one harmonic rotation, and then you get the real push to the high, and then from there we just went sideways. P-shaped profile yesterday, short squeeze on the excess low. This is what it looks like on the market profile chart. See that excess low right there? We open, we test down, then we push up, and then if we break up, if I split up the brackets here, you can see that but bullish yesterday. From there, we carry that into the overnights to the scene of the crime. Here's the scene of the crime, 93.75, 94, right in here. So there's where that bar opened, right here, the open of this bar. That's the scene of the crime, which is 93.75. The market comes all the way back, and then since then has not done a thing to test or to conduct the auction here at all. So here's where we've been for the last few days. Day and night session, just absolutely and completely sideways, near highs. The market's been stuck in this make highs, linger for a while, and then drop. Something I covered with Stage 5's members yesterday in the AMA. I'll go over that real quick since I have a little bit of time here. We have a gap up and run, so we gapped up and ran right here. Then we have another gap that went sideways, and then we went sideways a little higher, and then yesterday we went sideways a little bit higher. So if you look at those points of control, the point of control from 59.50 to migrated to 85.50, big skip. It migrated then again to, let's see, 91.75, then it moved up to 93, then it moved up yesterday to where it is now, 93.75. So what we have is the point of control, which is the most traded price of the day, the highest volume price of the day. The point of control is shifting up, telling us the price is being accepted higher and higher. Now, if you look at the underlying, this is breadth for the S&P 500. Okay, so let's switch this to a 15-minute. This is breadth for the S&P 500. So we're looking at the stocks, and we're looking for advancers minus decliners here. And this is your, so let's go back. Your gap day is the 11th, okay? So we look at the 11th, and there's your gap. There's your gap day. Let me change the color of my pointer here. So here's your gap day, okay? Now, if I was to plot the S&P on top of this, we would have seen another gap. The S&P would have traded up here. Then the next day, the S&P traded up here, a little bit higher. Then yesterday, the S&P traded a little bit higher, right? Yet the breadth or the advancing versus declining on the S&P 500 gapped up, down, lower, and then sideways yesterday. Okay, for new all-time highs. While the S&P continues higher, the breadth is falling. These 3 days here, the action on the 3 days is part of what fed Hypo 1 for yesterday's S&P trade to look for a rotation down. That's part of the input that I was looking for there. And we didn't get that. It just continued higher like it normally does. And so that's just another perspective on where we are, on where we are in terms of how supported or not supported this is. We've had financials leading the pack a couple days ago. Yesterday they lagged, and so on and so forth. So what do we do to carry that forward to today? This morning, because of where we are, we do have again options expiration today, quad witching, and the market is pretty much tested lower, but pretty much sitting sideways. Yesterday's low was the gap mid. Yesterday's low is 24.8750. So we traded yesterday's low. We were close to yesterday's low when we opened, and then we ended up pushing higher. So this morning, I'm expecting yet again. So yesterday the key resistance point was 91.52. I'm expecting that to be key resistance again this morning. I'm expecting the market to open auction. I'm expecting it to try to push higher. I'm expecting it to tangle up here and then rotate over and start to move down yet again. Okay, we're covered into the weekend. We had some geopolitical input there, the explosion in London, as well as the North Korea risk. Also, with options expiring and so on, the market might see a rotation down into the close. The expectation is for the market to balance out the trade for the week to the downside. So this is my primary hypothesis. The secondary hypothesis is for the market to trade sideways. We're opening in range, to drop, find a base down here, and then start to migrate up, find resistance in 91, 92 again, pull back, base, and then finally make it to the 93.75, and then close somewhere on a lower low. So I'm looking for a profile that looks like this for today. Thinner on the downside, heavier with a lower point of control. That's what I'm looking for Hypo 2. Hypo 3 is, I don't expect trend down. So Hypo 3 is looking for an impulsive push up that brings us back to 93.75. So an impulse up early on, bring us to 93.75, consolidate, push higher, take out the high, and then consolidate against yesterday's point of control. So this is Hypo 3, and again, this is a much sharper. So the point of control and a thin excess low. That's what the profile is expected to look like. I'll leave you with that. Hopefully this quicker format. I went into a lot of detail today, but in the future I'm skipping all of the news, the calendar events, all that stuff. You guys can look that up. And I'm going right into the recap of what happened yesterday because it's important so we can carry the story forward and get into the hypos within 10 minutes. Good luck. Again, please hit the thumbs up, the like button on the video. If you don't see one, go to the YouTube version of this and hit the like button on there. I appreciate it. Take care.